The Fed kicking off a two-day meeting. Not much is expected on the rate front, which our next guest agrees is the right move. Here to talk about the future of the Fed and much more, Heritage Foundation's Steve Moore. President Trump is considering him for a Fed board position, and you've been on the show over the years many, many times. And,
Thanks for having me back.
Great to have you today on the set. Did you ever think that a Fed board position was in your future, Stephen?
No, I never really did.
Never
I mean, it was the honor of my life when the president called me about a month ago and asked me to do this. And I half-kiddingly said, you know, Mr. President, you're throwing me into the frying pan. I had no idea that it was going to be like this. And, you know, by the way, let me just I talked to a reporter the other day who's covered the Fed for 30 years. He said he's never seen anything like this before. I mean, it's not like I'm going to be chairman of the Fed, and so it's been kind of a lightning rod. But I'll say this, Joe. You know, I was reflecting on this last night and talking to one of your producers. If there's anything positive that's come out of this, all of a sudden everybody's paying attention to the Fed and what it does and what its role is, and you know what people think about the role of money. And I think that's a positive thing. If anything good has come out of this kind of.
I hear exactly what you're saying, but approach it this way.
Yeah.
I'm not sure whether the president looked into all of your writings at Heritage about your view on monetary policy. So I'm thinking that he saw you basically agree with him about the Fed should not have been raising rates, and I think you called it economic malpractice, that rate hike in December. I think he saw that, and most of the decision he's making is based on you sort of being a political ally in terms of what you're going to do on the Fed. And I think that might, I don't know. I mean, I know a lot more about your thinking, and I think, I'm not saying you wouldn't be a good Fed board member at all, but I'm not sure the president made that decision based on a deep knowledge of what your feelings are about monetary policy.
Actually, I'll disagree with that. I mean, I've known the president now for 4 years. And Larry Kudlow and I started work. I was thinking it was almost exactly 4 years ago.
Larry could have been telling you that. So yeah.
Well, my point is that I was working side by side with Larry Kudlow and Art Laffer and Donald Trump to put this economic agenda together. I mean, look, if you want the biggest selling point for me, it's I helped put the economic agenda together. We've got the best economy in 20 years. We've got the best job market in 50 years. I mean, that's a pretty good qualification. I mean, all of these people, by the way, who are attacking me, people at the Washington Post editorial board, the New York Times editorial board, Paul Krugman. I mean, can you think, Joe, of three entities that have been more wrong on the economy over the last, 3 or 4 years than the New York Times editorial board?
No, I can't.
These are the people literally who said if Donald Trump is elected president, he's going to cause a second Great Depression. Now we have the best economy in 20 years, and these are the people who are attacking me. So my only point is, Trump has known me for a long time. This wasn't. I mean, Trump was trying to think, what could I do to help serve, his economic agenda? Right. And I think that's why he tapped me.
Not necessarily what the Fed's mandate is. The Fed's mandate is price stability and full employment. It's not necessarily, as we know from past arguments presidents have had with the Fed, it's not about the president's economic initiatives to spur growth and get him reelected. That's not why the Fed exists.
No, but look, I think the reason the economics team over there picked me, because it wasn't just Donald Trump, a lot of people had some input into that, was because we believe, I mean, this is the core belief of sort of supply-side economics, that you can grow this economy at 4%, without inflation, with full employment. And incidentally, I mean, the news that we saw on Friday is further vindication that Trump's agenda is working. But we have 3.2% growth, and there is no inflation out there.
Stephen, let me ask you, though, about that, because I think there's two significant economic questions that relate to this. And we can criticize different newspapers for predicting one thing or the other. But then at the same time, then we have to look at the predictions that you made over time.
Sure.
After the financial crisis, in 2010, you were calling for hyperinflation. You thought that things were going to get, and that clearly never happened. More recently, you've been talking about the idea that we are living in some kind of deflationary time, which I also don't think is necessarily accurate. So how do you square those issues?
So good question. First of all, let's go back to the Great Recession. Go back and read my book. Read the first 2 chapters of the book that Laffer and I wrote in 2008. That came out in the summer of 2008. Called The End of Prosperity, where we basically said, this is the end of prosperity. We're going to see a period now of severe economic contraction, and we were exactly right. I mean, I feel like if you look at economists, who had that period right? I did. I was the one who said the economic $800 billion stimulus plan would not work. I was the one who said Obamacare, all these regulations, we're going to create a very, very poor recovery.
But you would have wanted a more expansionary plan, in fact. I think if we go back in time.
I was wrong, and I've said this from day one. I was wrong about what happened in terms of prices in 2009 and 10, 11. But what I wasn't wrong on was that all of the, quote, fiscal stimulus had almost zero impact on growth. And my point was, and this is an important point in terms of understanding monetary policy, because this is a teachable moment for people. You can't make up for bad tax policy, bad regulation policy, bad healthcare policy by printing money. And that was kind of the view of the Fed, and it doesn't work, and that period proves it. Now, in terms of the last few months, again, has there been any economist who's been more right about the last 4 months than me? I was the one, you're right, Joe. I basically did say this was an act of economic malpractice. And guess what? It was an act of economic malpractice. When the Fed raised rates in December, it was indefensible. The stock market crashed in anticipation, and when that happened, and by the way, when the Fed put its tail between its legs, I mean, let's be very clear about the chronology here. It was really starting that day that the stock market and the economy boomed, and we've now got. So thank goodness the Fed listened to me.
But how can you say that we're in a deflationary period? I mean, you
because look what happened to commodity prices over that period. Commodity prices from September through December fell by like 12, 13%. When you've got.
But just to be specific, then when your call for deflation was strictly about commodity prices.
Looking at commodities, yeah, every one of them. Soybeans, wheat, cotton, copper, oil, natural gas, all of them were falling in price. Now, tell me how that's not a deflation when you have every. My point about commodities, because again, this is a teachable moment for people understanding how prices work. The best forward-looking indicator we have on where prices are going is to look at commodity prices, because though you have it right on your computer screen what's happening in real time. We don't know what's happening with the consumer price index. We don't know what GDP is. We don't know what a producer price is for 3 or 4 months afterwards. So I like to look at. I'm not going to only look at commodity prices, but I do think they're a good lead indicator. They're the canary in the coal mine about where prices are headed.
Stephen, when you think about the future, right? Let's say you get into the Fed. What do you see in terms of the value added that you can deliver collectively?
That's a great question, and I really liked the piece that Jeremy Siegel wrote about me yesterday in the Wall Street Journal, where he basically said, "Look, I don't even agree." He said, "I don't agree with Steve Moore on a lot of things he believes in." He said he agrees with some of the things I'm saying, but he said it would be healthy to have divergent views on the Fed, and I happen to agree with that. And the question I would kind of ask my critics is, why are they so afraid of me? I mean, why are they so afraid that someone with my views will get on the Fed? And I think partly it's because they think I'll be an effective communicator and maybe change. I said this a couple months ago a couple weeks ago on your show. I'll say it again. I want to make Chairman Powell the most successful Fed chairman in history, where we do get 4% growth with zero inflation. I really think we can get there.
Do you think it's ridiculous for people to worry about the comments in the past about women? That might be what they're fearing.
I mean, look, if this comes down to when we have that vote in the Senate, because I have to get 50 senators, if it comes down to things I wrote 18 years ago that were impolitic, that I've apologized for, that were insulting, then I'm in trouble. If it comes down to my economic ideas, I think
this is not just stuff that was written 18, 20 years ago. I've known you for a long time, too, and I was a little surprised by some of the stuff that I read that was more recent. 2014, column for the National Review.
Yes.
What are the implications of a society in which women earn more than men? We don't really know, but it could be disruptive to family stability. If men aren't the breadwinners, will women regard them as economically expendable? We saw what happened to family structure in low-income and black households when a welfare check took the place of a father's paycheck. Divorce rates go up when men lose their jobs.
So I'm glad you brought that up, because let me clarify what I was trying to say, because maybe I wasn't being specific about this. The biggest problem I see in the economy over the last 25 years is what has happened to male earnings for black males and white males as well. They've been declining, and that is, I think, a big problem. Look, I want everybody's wages to rise, of course, but people are talking about women's earnings. They've risen. The problem actually has been the steady decline in male earnings, and I think we should pay attention to that, because I think that has very negative consequences for the economy and for society.
Yeah, but I also think, as a breadwinner in my family, I think that women should be paid fairly for what they do. And I think
no disagreement on that.
You just need to have a semicolon and make sure you're always saying that as well.
Amen. Well put.
Yes.
And that was the point if you read the whole article, see, this is the problem. People take one or two sentences out of a piece. It was all about what's happened with white middle class and black middle class earnings, and they've been falling for males, whereas women's earnings, and I want gender equity in terms of pay and things like that, but I want to make sure everyone's wages are rising. By the way, our record on wages has been fantastic. I mean, we've seen really big gains.
So you're in the middle of the process, Steve. What do you end up on the Fed or not? What do you think? 50-50, 80-20, 10-90? What do you think?
I think I'm going to be on the Fed. By the way, the president, and the White House economics team is totally behind me on this. I mean, I've actually been...
Which has been apparent, too.
Yeah, I mean,
Larry Kudlow came out again yesterday.
In fact, one time a couple weeks ago, I called it.
You'll still come on if you become a big shot?
I said, you're not stepping down, get back in the ring.
You'll still be on the show if you're a big shot? You'll come back.
I'm not going to remember the little people like you.
I know. That's what I'm worried about.
I'm teasing.
Thank you, Steve.